Good evening. I'm Daniel Jacobs with TruLoan Mortgage. We welcome you to a real talk about millennial homeownership. Thank you for being with us tonight. I am just going to apologize. We got a very slight late start here, and I'm moving a couple things around on my screen. All right. So I want to start off by thanking you for joining us this evening for Real Talk about Millennial Homeownership. We've got a great panel here tonight. I'll be your host, your moderator, and we've got some great professionals here with us, including Nick Macri from eXp Realty, and he is a millennial superstar realtor here in the Charlotte market that is going to answer all kinds of questions for us about buying a home, particularly as first-time home buyers. And we're going to explore all the issues and concerns and excitement that comes along with that with Nick on our expert panel. In addition, we have my colleagues, Matt Wise and Brenda Jarvis, both co-founders of TruLoan Mortgage. So we'll be answering all of your mortgage questions in addition to your real estate questions. At the end of this event, please watch your email. There's going to be a link that's going to come in. You're going to have 2 documents there that are really fantastic resources. There's going to be the Smart Guide to Home Buying. This is going to take you through step by step a lot of the things we talk about, but it's going to be outlined very easily, checklists, and just kind of get you focused on what's next, what's going on throughout the entire process. In addition to that, we've got another booklet that has a bunch of good articles like, how student loans impact buying a home, and all kinds of other things that are very helpful based on feedback from many other attendees of prior events. That email will come to you afterwards. In case anyone needs to leave early this evening, I do want to mention a few pre-approval incentives that are going on, okay? So number one, you'll get in that email afterwards, you'll have the opportunity to sign up for this. If you sign up to get pre-approved, we're gonna do a $50 gift card to Legion Brewing. Folks, normally, before COVID, we would do these events at a local brewery. We really loved Legion. We did some others as well. We go and we have fun. We have a beer. We have a few appetizers, and we talk about homeownership. Right now, because of COVID, we're doing this remotely and through Zoom. However, we still want to support our local businesses, those local breweries, and we still want you to have some fun. So we're going to send you that $50 gift card if you follow through with a pre-approval. We want you to go when you feel good about going in to having a beverage and an appetizer and socially distance on your own. You go in and take care of that with that $50 gift card. Additionally, if you do follow through and get pre-approved, whether you're looking to buy next month or next year, it doesn't matter. The key is scheduling that pre-approval, getting that pre-approval on the book so you know exactly what you need. If you sign up for an appointment, and that appointment could be next week, it can be next month, as long as you sign up and schedule it by Friday, this Friday the 30th, okay? You will get a free appraisal credit up to $500 no matter when you close, whether it's next month or next year. And then also Nick Macri with the eXp team, they are offering a $500 realtor credit toward closing costs with a minimum $175,000 purchase price. And I believe they're looking for contracts by the end of this year to be eligible for that $500 realtor credit. So between that, you got like $1,000 in there from this team. All right, so as we go through, I'm gonna back up a slide. As we go through, I just want you to know you can ask questions using the Q&A button, and you can also use the chat feature. Now, a lot of us have gotten used to using Zoom. Many of us had no idea what Zoom was before COVID, but now we've gotten used to it, right? And most of us that we're using the Zoom meetings, which when you're on Zoom meetings, you're used to seeing all the other participants' pictures, right? Right now, you just see Matt, Brenda, Nick, and me. We're in the webinar version. So everyone is muted except for the presenters. And we encourage you to ask questions by typing them into the chat or the Q&A. I'd like to just practice a little bit with a few questions we've got and use the chat button. Feel free to just put A, B, C, or D in here with these questions. And then we're going to turn to our panel and get started with your questions for the evening. The average down payment the average down payment among first-time home buyers is what percentage of the home purchase price. Just put in A, B, C, or D if you think it's 10%, 6%, 20%, or 3%. 10, 6, 20, or 3.
A lot of A's, a lot of A's.
A lot of A's. I see a few B's, a few D's, couple C's in there. All right. Well, the answer, folks, is B, 6%. 6%. Now, mind you, 80% of first-time home buyers put less than 20% down. We hear a lot, hey, I got to save up for my down payment. There are so many really low down payment options, and it helps you with the wealth building process. Now, speaking of wealth building, oftentimes we hear people say, I'm going to wait and save up and buy it in a year or 3 years. Let's explore what that means to you, okay? So if you buy a $275,000 house, pretty average price house in this market, and you buy it a year from now instead of today, how much wealth you're going to lose out? Let's assume you're going to put 3% down, minimum down payment. You're going to have that house go up in value based on the market, just increasing. And if we use average, value increases from the last 5 years and project that out 1 year, and then you've also got equity you're building through your mortgage payment. You pay interest and principal, and so the principal reduces that balance every month. So in a year, if you were buy the day with 3% down, how much wealth would you build that if you rented, you would not build by waiting a year? A, 7,200, B, 31, C, 16, and D, 3,900. Don't be shy, just put those answers in there, A, B, C, or D. I see we kind of got them
more A's.
We got some smart ones here. I see quite a few C's in there. A few A's. I see a B. The answer is C, $16,291. Okay. And then let's just extend that out. If you go at 3 years, it's like $51,000, right? You're probably not saving money that fast. So that's why homeowners build 44 times the wealth of renters in the United States. It doesn't happen in 1 year. It doesn't happen in 3 years. That 44 times, it happens with the cumulative effect of homeownership because that asset continues to grow in most periods of time. And that ends up being most people's, most significant asset. So 44 times the wealth building. And that's why we look at starting soon, starting earlier than later, if you believe you're ready and you want to buy a home. Now, got a question. This comes up in a lot of prior events. People have asked, what does it cost to get an exclusive buyer's agent instead of using the seller's agent, meaning the person's name that's on the sign from a home that's for sale? That's the seller's agent. Having your own person, your own realtor that represents you and you only in your interests. What is the cost of that? A, B, C, or D? 3%, 1.5%, 0, or 6%. All right, you guys are catching on. We've got quite a few C's there. Got a few 1.5%, 3%. So Nick, I'm going to turn to you on our panel at this point, and I would just like for you to kind of share with us what is the answer to that. How much does it cost to have an exclusive buyer's agent?
Well, the correct answer, I forget the letter choice, but the correct answer is 0 in North Carolina. And that is because in North Carolina, the sellers typically pay the commission. And so what that means is that the seller is offering a commission to their listing agent who's representing them. And they're also going to offer a commission to attract a buyer and a buyer's agent, and they're going to pay that as well at closing. So for all of you buyers out there, the prospective buyers, the cost to work with someone like myself, to have me negotiate on your behalf and work on your best interests, is nothing. And that also applies to new construction, right? And that's another related topic that we get to. I know it's a question that I think someone actually put down in there in the chat as well, privately, in terms of new construction. New construction, you have someone, you might walk in and you have someone there, a salesperson that's sitting there at the model home. And you have to realize that that person works for the builder. They're going to be very nice to you. They're going to be, try to help you out as much as they can. And that's all good and well, but remember who's paying, their commissions and their checks, right? It's the same person that they represent, which is ultimately the builder. So, in a lot of scenarios, I've been able to help many of my clients. I work a lot in South End, and there's a lot of new construction condominiums and townhomes there. And I've been able to negotiate many things for my clients on their behalf because now you have someone that's going to represent you and be in your corner and not try to work both sides. So it's very important to understand. So ultimately the cost though is zero to work with a buyer's agent in North Carolina.
And it's interesting. You do bring up a good point about the new construction because a lot of people do feel like, oh, I've got to go, that's who I'm buying from. But I just want to go back, even separate from new construction, to clarify. Doesn't it mean if I'm a buyer and I just go to the listing agent, they'll owe less commission, the seller will owe less commission, and so I can get a cheaper price on that purchase if I just use their agent? Isn't that true, or is that not a thing?
No. So when the listing agent or when the seller signs a listing agreement with the listing agent, they are saying that they are going to pay a certain percentage to the listing agent and to the buyer's agent. And normally they will sign off on this happens 9 out of 10 times. They'll sign off and allow that if the listing agent brings the buyer, or if their buyer comes in unrepresented, the listing agent then thus is representing both the seller and the buyer, that there'd be what's called a dual agent in North Carolina. And no matter what, that agent is going to get paid both commissions because now they're representing both sides. But in North Carolina, for dual agency, that's what I was going to get to, for dual agency, right? North Carolina, they define that, the real estate commission defines it more as a moderator. That as an agent, right? And I've been in dual agency situations. It's tricky because, you are not able to really negotiate on behalf of either side. You have to allow the parties to work together and try to find the middle ground. And so you're working with someone and they're still getting paid the same amount. You're not going to get a reduction in the price. And ultimately you have someone that is not working solely in your best interest as a exclusive buyer's agent would be.
Right. Yeah. And Nick, I noticed you mentioned North Carolina a couple of times. Some of our attendees live in South Carolina. And I think that rule and what you just talked about applies for both North and South Carolina. Isn't that correct?
Yeah, I'm not South Carolina licensed yet. I am getting licensed. I'm actually in the process of it right now. It's been a little bit slowed.
Sure, but you've got members of your team that are in South Carolina.
Yes, and I do have members of my team in South Carolina, so I just wanted to disclose that. But yes, I believe that is essentially the same case in South Carolina.
Sure. So, okay, so really no advantage to not having a buyer's agent. You're not going to have your own personal representative. Really not going to save money because the seller's obligated to pay that full commission no matter what. So you should have your own person looking out for you as the theme of that message. It costs you nothing, right?
It costs you nothing. And it's also peace of mind to work with someone who's in your corner, because if you're working with, you say, well, I could go straight to the listing agent. Well, if they're representing you, everything you tell them, if it also benefits the seller, they're obligated to tell the seller. So there's really no negotiation there. And your power to negotiate things is severely limited. And to work with someone that is in your corner and can help fight and save, thousands of dollars. I've saved some of my clients well over $10,000 in negotiations and in bidding and repair requests. I mean, there's a whole process, and you definitely want a team to support you on those ends.
Yep.
So it's almost like you just read everybody their real estate Miranda rights. Anything you say to the listing agent can and will be held against you. So have your own buyer's agent, right?
Yes, and you want someone who's well versed in that. Believe me, I actually have the pleasure of training some newer agents on my team and in my company. And some of them will go on a practice call or do some cold calls to other agents, and they'll be very nervous, and then they'll slip up and say something. Right? You want to work with someone in a team that's experienced in negotiating on your behalf. Because every piece of information I hear from the other side as well, I'm going to use to your advantage, as a buyer, and that's the role that you play, and that's why you want someone that's on your side and is not towing the line.
Right, I completely agree. But I'm going to turn to one of our first questions, and I'm going to ask Brenda. The question is, tell me, as a first-time home buyer, what should I expect as a down payment? What are my options for loan programs as a first-time home buyer?
So there are different down payment requirements for different types of loans. There are also different types of loans in general. There's government loans that are backed and or insured by the government in different respects. And then there's conventional loans. So on the government side, you can have, there's three different types. There's a USDA loan, rural development backed by the Department of Agriculture. There's an FHA loan backed by HUD, and there's a VA loan, which is backed by the Department, the Veterans Association. So the USDA loan and the VA loan, they both require zero down payment. Of course, you have to be a veteran to get a VA loan. And the USDA loan, there are geographical requirements. You have to buy, your property is likely going to be sitting in a rural area, not always completely in the middle of nowhere, but you know, the geography is mapped out by the Department of Agriculture. You could be on the cusp of one and be pretty close to, you know, civilization, if you will, and still be in the rural area and still qualify for USDA and zero down payment. And then the FHA loan that requires 3.5% down. And again, those are all government loans, and typically you can qualify with those loans for also a little lower credit scores, fall into those as well. Over on the conventional side, you can get into a conventional loan for as little as 3% down. With the conventional loan, if you have less than 20% down, you're going to have to pay mortgage insurance, which I think Matt could probably talk about that, and we may get a question about that a little bit later on about mortgage insurance and what that costs and how that affects your payment. But if you put less than 20% down, you're going to have mortgage insurance, but you can get into a conventional loan with as little as 3% down.
Okay, so then tell me about this 20% myth. I mean, so many people we run into think they need 20% down. So it's really not necessary, right?
It is not. It is not necessary. And with interest rates as low as they are, and mortgage insurance used to be based on just one factor, how much you were putting down. If you put down 3%, then you were going to have the highest mortgage factor and the highest mortgage insurance premium per month that you could possibly get. If you put down 5%, it went down a little bit. If you put down 10%, it went down like 4%. Put down 15%, that was the least mortgage insurance you would pay. But these days, mortgage insurance is actually risk-based. So if you have a really, if your loan profile hits all of the risk, I don't know,
factors,
thank you, in a positive way, then you're going to get a very low mortgage insurance premium. In other words, if you have a very high credit score, your debt to income ratio is low, even if you're just putting as little as 3% down, you could have a very low mortgage insurance premium. I've seen people put as little as 3 or 5% down on a $250,000 mortgage and only have $40 or $50 a month in mortgage insurance.
And I was going to say, actually, Matt, you were just talking about a client that had waited 4 years longer than they planned to buy because they saved up 20%. And ultimately, when they found out how cheap it was for mortgage insurance, they decided to hold on to their cash and put a much smaller down payment down, right?
Yes, you just described the situation, but the borrower did everything that she could do, thinking she was doing the right thing. And when we sat down and looked at the numbers, you know, I gave her the options. And when she saw how affordable the mortgage insurance for her was, she saw the reality was that she was going to take $30,000 from her savings account and put that towards that house. And that was going to save her approximately $50 a month. And so it was a no-brainer for her. That is nowhere near worth it for her to diminish her savings like that. And the thing I tell people about mortgage insurance all the time is not to be afraid of it. It's a great thing. It's the thing that allows you to get into a house without having that 20% down payment. It allows you to become a homeowner earlier. And in this market, it allows you to get that appreciating asset quicker rather than on down the road. And you can take advantage of it because as we've seen every
Sure.
year, the price of houses is going up. So that mortgage insurance is a useful tool for you. Do not be afraid of it.
Yeah, no, I appreciate that, you sharing that because that's really important. Nick McCree, I have another question for you. Tell us about COVID, okay? Everyone wants to know, obviously we went through the initial lockdown and, now people are out and about more, but still, I mean, there's, people are still cautious. They're still concerned and with good reason. So talk to us about shopping for a house in this time dealing with coronavirus.
Yeah, well, that's a great question. Shopping for a house is no different though, right now than it's ever been. And we've seen a trend recently too. I've been blessed with the opportunity to be in real estate for over 3 years now, and it's something that I'm blessed to be able to do in my hometown because I was born and raised here in Charlotte. And so, I've seen it grow. In this market, it's a great market. But where do people look for homes, generally speaking, is online. Over 50% of all home buyers last year, this is the first time it's ever happened, ended up buying a home that they saw first online before they ever, took a look at it in person. And that's a trend that's continuing to grow. Most home buyers are looking online, finding things they like, and then the process, in terms of showings and working with a realtor to set up private showings. And obviously with COVID, there are, more restrictions regarding show times, how many people can be in the home, and obviously different guidelines to going and viewing. But generally speaking, the process has been, untouched. There are some addendums to be careful of, with COVID, regarding COVID on certain contracts. There's things that some agents will want to put in regarding a COVID addendum that could get them out of a contract or a deal, if someone was to have COVID or delay closing and things of that nature. And so, those are all things that are good and well and meant for the right reasons, but it's things that you want to discuss with your realtor and be prepared for. And all it is that's changed really, I believe, Daniel, is a communication factor. I believe that because now a lot of these things are done virtually, great communication with your realtor, not just your realtor, but we're all a team here too. It's your lender, your realtor, the contractors, inspectors, everyone that works, the attorney, the appraiser, everyone that works together. Because everything is done so virtually now, it's very important now more than ever, I think, in this process to have great communication. And I would say that more than anything is the only main difference that I see in the process.
But I just want to clarify, you're not suggesting that if you want to buy a house now, it has to be virtual. You can go out and look at houses, right? You're just saying that it just has pushed that more to initial looks like that, right?
Yeah, what I meant with that statistic, is that basically there are so many people now, over 50% of them, that when they're looking online, they're saying, "Hey, I think I want to go and schedule showing myself," and they're reaching out to their realtors and saying, "I like this house." And so what I meant by that is that people are looking online. You have video, you have great pictures, you have everything at your fingertips, and your realtor has the same information and can work with you on these things. And essentially, it's just never been easier to get great access to information. But when it comes to the actual process, yes, if you find with your realtor a list of homes you'd like to go see, schedule a private showing and make sure you abide by all the guidelines.
Sure.
And you keep following through that process.
Yeah, we're mask, PPE, everything is. There's a lot of protocols for keeping safe and buying right now. So that's great. We have a question. Someone says, look, I've got some student loans. I hear in the news all the time that with student loans, it's hard to buy a house. Brenda, do you want to kind of talk about that and how student loans impact being a first-time home buyer?
Sure. Student loans, again, are looked at by the different agencies differently. So a lot of folks have income-based payments, and their payments are a lot lower than they would be if they were fully amortized over like 20 years or 15 years or 10 years, depending on how many many dollars of student loans you have, and how the agency actually set it up. So those income-based payments that are typically lower allow you to qualify for more of a house if in fact we can use them. With COVID, it's a very unusual time. Almost all of the student loans are showing up on the credit reports in forbearance. And student loans in forbearance have different rules than anything else also. So I've actually found that these student loans that are in forbearance are allowing me to use the rules to allow people to qualify for homes that they may not have been able to qualify if their full payment had been shown. So if you have a student loan, now might be a really good time to give us a call and have us take a look at it, especially if you have a large amount of student loans. You might be in this little time period that you might be able to take advantage of and be able to get into a house that you might not be able to get into after December 31st when the forbearance goes away.
But even still, with pre-COVID, I'm going to ask Matt and Brenda this. What percentage of clients, first-time homebuyers, have some student loans, maybe a lot of student loans? What percentage of them were precluded from buying a home because of the student loan that they had?
So far, none for me.
I can't remember a single one. In fact, I'll give you a really good specific example.
Mhm.
We have a young couple that is out there looking at houses right now, and they've made a few offers. They're going through the process. They have wonderful, a wonderful agent working for them. We know exactly what we can and can't do. One of them has $300,000 worth of student loans out there.
Just a little bit.
Just a little bit. And she has $300,000+ loans out there. Does that prevent them from buying a house? No. It really puts them still in a position where and look, these are not people that are earning very high paying jobs that can go out and buy anything that they want. This is, a normal person on a normal income, but they have $300,000 in school loans, and yet we can still get them a house. So that's why we encourage people, whatever your situation is, you're not the expert on qualifying for loans with student loans. Let us talk about it. Let us look at the details, and we'll get into it with
A
you
lot of
and
options.
make sure that your approval matches what your situation is.
Right. Lots of options, what I'm hearing. Lots and lots of options.
Yeah.
Hey, Nick, we kind of had some questions that got us digging into the nitty gritty already. I would like, if we can just take a step back. And we talked about pre-approval, okay, which I'll have Matt and Brenda go into more detail on that. But tell us, what is the home buying process from start to finish? And you can address from a realtor's perspective the importance of pre-approval, and then we'll ask Matt and Brenda to dig more into defining that. But if you can just walk us through that process, I think that would be terrific.
Sure. Yeah. That's, it's a process that that ultimately starts with what I would call a buyer's consultation. And it's something that everyone on our team is very much encouraged to have with every buyer. And it's where we will sit down and take about 15 to 20 minutes. And we do a lot of these virtually now on Zoom.
Yeah.
We're going to meet a lot of my clients for the first time and really walk them through this process. But during that consultation, we're going to walk through this process, which initially we'll start with looking at what your needs and what your time frame is. And so identifying that with the client is, very important. So each, situation is different. Like Matt was just explaining a very specific situation. Everybody on this call is going to have different needs and wants and time frames. And so establishing a good, plan of action is always something that I like to establish first. And then, once you set up a search criteria for what you guys are looking for, I would set up basically a search for you guys and start sending you different listings and things to look at. In which case we would then, start to narrow down your search. And when the homes come up that we'd like to go schedule a showing for, we would go schedule a showing. And we would hopefully a couple homes, narrow them down, and maybe be in a position to get ready to make an offer. But taking a step back before all that happens, as you know, Daniel just mentioned, you know, is the other side of the home buying process, which is, you know, getting pre-approved. And so at the buyer's consultation, one of the first things I always do is I always ask that question, and you know, we'll see if you'd be pre-approved or not. In which case, I might recommend a couple of you know, lenders that I've worked with. I know a couple on this call right here that are you know, excellent partners and have a great team to support you guys. And so again, while you were looking, you know, at homes and maybe going out to go preview and see a couple things, going through that process of getting pre-approved is so important, because before you make any offer, as I was alluding to, every listing agent is going to want to see a pre-approval letter. That way, you know, they can feel confident with their clients, you know, and their sellers, you know, and accepting an offer. So getting pre-approved before making an offer is vital. And generally speaking, Daniel, I'll throw it back to you. How long would, you know, that process take for an average client?
For the pre-approval,
Question.
Yeah.
same day, unless it's evening, usually the next morning, but I mean, 3 business hours, pretty
So
consistently.
would you say that for most people, there's almost no excuse to at least doing the first step, right? Which is getting pre-approved?
Yes.
Instead of getting-
Oh, for sure. But look, we believe the first step is to get pre-approved, because that way they know, the client knows exactly what they're looking for budget-wise. Because here's the biggest thing, and Matt and Brenda chime in on this. A lot of people, because rates are so low. I mean, I've been doing this 24 years and never thought we'd see rates like this. People are surprised at how much house they can actually afford with the payment that they're looking to pay. And a lot of people are getting in homes for a lower payment than their rent, and they're getting a bigger house or a nicer house than what they expected, because of the advantage that they have of extraordinarily low rates.
Yeah.
So I mean,
Yeah,
Brenda,
I'll
don't you
chime
think
in there and
that's responsible?
I'll chime in and say that the vast majority of everybody that we pre-approve, the governor for what they want to buy is really them. We can pre-approve them from a lot more than they want to spend on a payment. And that's just because the rates. A lot of people have an idea. Let's say that someone's renting, and let's say they're paying $1,600 a month. And when we do the math and calculation on that, we can usually pre-approve them for a lot more than that in a mortgage. And we're in this weird situation where Daniel was saying rates are low. They are. We're in this weird situation where, for the first time, at least in all the, you know, unfortunately decades now that I can say that I've been doing this, the truth is you can go out and buy a house that's equivalent to the house that you're renting. Let's say that you're renting a single family. You can go out and get a mortgage now and end up with a cheaper payment than your rent price here in Charlotte. And that's normally not the case. And we'd never tell somebody that in the past. You know, you'd have to always factor in taxes and insurance and all the costs of being a homeowner, but you're getting that appreciation on the other side. It's always been a good deal still.
Yeah.
Well, now it's just a ridiculous deal because the rates are so low. You can actually get the same house for less money. So that's just a function of the rates. So, you know, everything is on the table.
So Nick, buyer consultation, pre-approved, then they know what they're looking at. You're going to go over what neighborhoods, you're going to get them set up where you're going to be sending them listings in real time as they come up based on their budget and the neighborhoods that they want to search in. And why is it more important for them to have that set up with you than consulting like Zillow and Realtor.com and such? Why is it, what makes that better?
Well, you want accurate information, first of all. So, you know, Zillow and all these other websites are third-party kind of vendors that, you know, take different information from different places, but it's not real and accurate, you know, and live. And so the data that we can pull is straight directly from the MLS. You know, my website is updated every 15 minutes direct from the MLS. I have an IDX feed. So those are things that are beneficial. But yeah, I mean, getting back to that process, you know, you've gotten pre-approved, we've looked at homes, you're ready to make an offer now, you're confident because you have that pre-approval in hand and you are ready to make an offer that you're comfortable with. You know, especially in this market, there may be multiple offers. So, you know, the process can be, you know, pretty simple where a seller and a listing agent say, well, this is a good offer, and they may counter. You know, they may want different things, in which case we'd want to negotiate on price and different things like that. Sometimes, like I said, in this situation where you have multiple offers in a market like this, You may have like a highest and best. So you might have to go through multiple rounds of, kind of negotiating your offer. And that's why it's important to know on the pre-approval side, like Matt was saying, what your range is. And it's really up to you to decide. But let's say you're able to get it under contract. We've negotiated and you got under contract. You have an executed contract that everyone signed. And now you're into what's called due diligence. So you're in a due diligence period. So you have 2 deposits in North Carolina. You have a due diligence deposit, which it goes straight to the seller. And it's essentially for them to take their home off the market and for you to have inspectors and different contractors come out and look at the property. You have your earnest money, which is going to be held by an attorney that you would generally choose as the buyer. And you're going to go through this process of due diligence, which on a normal transaction, if you are closing, let's say in 30 to 45 days, your due diligence would be 2 to 3 weeks, perhaps. And during that period, you're going to have a home inspector, and of which I could recommend you one. And I work with a few. You're going to have a trusted third-party inspector come and look at the house. They're going to give you a detailed report of the different items in the house that are not up to code or not functioning, or if there's any problems in the house. And then you're going to have what's the most fun out of all this, which is the repair request, which is where, again, this is where I mentioned earlier, having an agent that works specifically for you comes in handy the most. And I say this, and Daniel's nodding too, because I'm sure you've heard stories and you guys have been through this plenty, but this is where, having an agent that can negotiate on your behalf really makes a difference. So I'll give you guys an example. I sold a home up in Northstone, which is a beautiful community in Huntersville, just north of Charlotte. And the inspection came back. There was, a couple things here and there on the report, things in the crawl space, stuff like that. But my client wanted to get a second opinion on something that was in the inspection because there was a problem with the drainage. And I recommended a few contractors to him. And he said, well, I know somebody that was recommended to me by a friend of mine. And I said, okay, well, let's see how it goes. And these people came out, they took a look and said, well, they need to replace the entire front stoop. It's going to be about $15,000 in cost. And I said, wow, that is a high number. Seems a little bit exaggerated for me even. And the sellers were, they were blown away, and they had their own contractor come out, and he gave a budget of $2,500. Okay, so we're at 15 grand.
Same project.
Yeah.
Okay. All right.
We're at 15 and we're at 25.
Right.
And long story short, after having a couple of the contractors and me really pressing, the sellers hard, because, we had a very strong offer. They put a very good deposit down, and they wanted the home. And I was able to get them $10,000.
Wow.
Negotiated.
Very nice. That's good.
Now, here's the kicker, right? And this is, again, where it makes a big difference. If you have an agent that can actually, work things out for you. He had the contractors go in there and actually do a repair, and it wasn't the full repair. And he calls me about a month later. He says, Nick, I only spent about $3,000 on the whole thing. So he's like, I basically just netted an extra $7,000 from that. And I said,
that's a good deal.
There you go. So again, you're in that due diligence phase. You have repair requests. That's where you're gonna have a lot of negotiation back and forth on what needs to be fixed and what doesn't. But that is where, again, having a team, having an agent on your side really makes a big difference, and it could save you thousands of dollars in this case. And so again, you're gonna go through due diligence. After due diligence period's over, you're pretty much set for closing. If you were to something was to come up afterwards, you could still back out, but you would lose your deposits. So, that is the case, but you're going to eventually go ahead, Daniel.
Just to clarify, during due diligence, that's the time during which if they find something that they don't like about the house,
Sure.
or the appraisal comes in short, they can walk away and they don't lose their earnest money deposit, right?
Sure.
So
Yeah,
that's what that is, right?
Yeah, so due diligence, again, yeah, you're right. If you
There's a
walk out
small fee for the due diligence to have that opportunity to look at it, look under the hood. You only lose that tiny bit. The big deposit is the earnest money. And they get to get that back if they choose to walk away, and they don't even have to have a reason. They can just change their mind.
Yeah,
want,
and
right?
what's important to note too, the reason I brought that up as well is that it's important to note that you as a buyer are the only one that can back out. The seller, for any reason, cannot back out of a closing. Once
Well, heads up and tells you lose deal, right?
Great point.
Yeah, the seller cannot back out. So once they have signed your contract, you're executed, you have control. They, you know, so even, I'll give you an example. If I put in the due diligence deposit and it's paid within 3 days, which is, you know, when you need to get that after we sign an executed contract, once they receive that check and we're under contract and we're in due diligence period, it doesn't matter if I made an offer of 300,000 and then some other person made an offer of $1 million on the same house. The seller cannot say, well, you're out, you know, I'm taking this other offer. That is what protects you. So again, the reason I bring that up is, you know, after that period, you can still back out if you wanted to as a buyer. The seller is still tied to that contract and will execute it, you know, faithfully because they are bound by it. So you've made it through this entire process. You've gotten through due diligence, you got through repairs, inspections, and now you have the last, generally the last thing, which should happen around the same time as repairs, which is going to be if you're on a conventional loan or any loan that requires an appraisal. And this is where, you know, from the mortgage side, right? You guys on the mortgage side are going to recommend an appraiser go out there to appraise the value of the home. And generally, again, this will happen, you know, around the same time as all the inspections and repair requests are happening. And this is generally the last thing that would happen, you know, before you move through and are given a clear to close on the lender side to go to closing. But you're gonna have an appraiser go out and appraise the value of the property, and all they're trying to do is say, is this home worth, generally speaking, what's the market value of the home? You know, I always will tell my clients a home's value is what someone's willing to pay for it. Okay, and generally, you know, that is the truth. But again, you know, they want to protect the assets of you, make sure that, you know, in your best interest that you're making a great offer as well. And so this is going to give you third party, you know, validation of the value of the home.
Mhm.
Now, again, valuations can come back low. They can come back high. They could be right on the money in a lot of different cases. But ultimately speaking, it's not always a deterrent to close. So Daniel, actually, I wanted to ask you to give a little bit more information on that, because this is always a topic that we realtors get, and there's a lot of ways to handle it. But I know that, you know, if you're working with a team like you guys that are, you know, creative in how to, you know, work around, you know, different things that happen with appraisals, right? There's many ways to handle that, correct?
Look, I think the reality is we have a pretty strong mixture of most appraisals come in right where they need to be. A good number of them are still coming in high, and sometimes they come in low. Matt, you've had that recently, and ultimately,
Yeah.
what was the result of some of those low?
Let me speak on this topic.
What can happen?
Yeah, let me speak on this topic because of the unique sort of features of our market that we're in right now. I've never seen in all my years of doing this, I've never seen more short appraisals than right now. And it's just a function of the fact that a lot of people are out there making bids. There's a huge demand for mortgages, a demand for houses, and there's very short supply out there in the market. And so prices are going up because all these people are available. Part of that's because of the rates.
Mhm.
So we've seen a lot of short appraisals, and we track this all the time. And we have a lot of strategies to deal with it. It's once again why you need a great team, you know, behind you. It's not just, as Nick said, it's not just the team too. It's all the vendors and all the orchestration of everything behind the scenes. But when that appraisal has come in short, in 100% of the cases, our client has benefited from that short appraisal so far in
How do they
2020,
benefit from
which is awesome. So it could be in various ways. A lot of times people know as they're entering in a transaction. Let me give you a real world example.
Yeah.
House is listed at 245. The listing agent has done their research and they have determined that's the market value at 245. A bidding war ensues. Multiple people are trying to get that house. They really love it. And let's say that price goes up to 260. Okay.
Mhm.
It's not outside the realm of possibility in Charlotte market.
See it every day.
Appraisal comes in short. Well, that buyer, our client, was willing to pay $260,000 for that property. The appraisal comes in short, and let's say it gets appraised for 250. They meet in the middle somewhere, or the seller comes down to make the deal work, or whatever we are doing behind the scenes. Everybody pitches in. We all figure out these solutions. In the end, our client has benefited from those short appraisals 100% of the time. So there again, you never know how it's going to turn out. But when you have a great team behind you that knows how to handle these situations when they do come up, same with repairs, Nick was talking about earlier. Repairs is where a real estate agent really makes their money, and they bring all that value to you and all that experience, because you're going to have that initial round of negotiation, and then you have another round of negotiation. Appraisal is the same way. When that comes in, your lender, your realtor, your whole team gets together. We come up with an attack plan. Sometimes that attack plan is negotiating down. Sometimes that attack plan is we see something in the appraisal that we can argue, and we can get that appraisal readjusted in our direction. We had one earlier this year that I got adjusted upwards twice, which is unheard of. They made an adjustment upwards. I argued it again, and they went up again. So you never know. You need a good team behind you, and that's one of the many things that we do.
Goes back to representation, because the selling agent is never going to offer to lower the price to make it happen. So I agree. Wait, Shantae's got a question. She is asking about, when I buy a house, when do I have my first mortgage payment due? It's a great question. Brenda, can you handle that?
I can, and this is actually important, especially if you're in a lease that may not be completely finished. You know, the timing may not be exactly right.
Right.
When you have found the perfect house and you're going to close that house. So when you pay your rent, you pay on the 1st, and that's for November. You know, it's coming up here in a week or so. When you pay on November 1st, that's for the month of November. When you close on a mortgage, you pay your payment in arrears. So let's say you close on your house in November. Your first payment will not be due until January 1st. So you skip the rest of November, depending on what day you closed in November, all of December, and you make that first mortgage payment January 1st. So
There's a little wiggle room while
if your timing isn't exactly
exiting your
right on
lease.
your rent, and you don't want to have all that pressure of moving out the exact same day you have to move in, you know that you can stretch it 1 month and not really have any overlapping payments.
Thank you. That is a really good question. And Mike is asking about, he says, I've got Credit Karma and I know what my FICO score is. What score do I need? And is Credit Karma reliable for that?
Yeah, listen, I pull every single credit. I pull credit reports every single day of my life. And I pull everybody everybody has an idea what their credit score is. I ask them what the source is, and they tell me CreditWise, Credit Karma, I pay Experian for the service, whatever. And then 9 times out of 10, not even close. It wasn't close for me when I did my refinance earlier this year. It was 45 points off of my score. I just tell people the honest truth. We, in the mortgage business, we pull a particular credit score of all 3 bureaus, and that's how we look at it. A car lender might have a different score. The reason why you have a credit score is for buying a house. This is the real reason you have a credit score. Everything else is, yeah, it's important, but secondary. Buying a house is the #1 reason why you have a credit score. And I tell people, don't be afraid of pulling your credit. The system is designed so that you can have your credit checked when you're shopping for a mortgage or shopping for a car or getting new credit, whatever the situation is. Don't be afraid of that. Don't listen to Credit Karma or whatever they're telling you your credit score. Sit down with us. Let's walk through your situation and go through your actual score and share it with you and go line by line through what's reported. Let's find out if everything is correct. Let's find out if there's some quick fixes that we can do. Let's find out if you have nothing to worry about. You do not know how many people, especially, people have in their head that they have bad credit and and I pull the credit and I say to them, like, no, you don't. Your credit's fine. Everything looks great. This puts us in a great position. And I look at their face and they're just like, and I wish they didn't even have that stress. So this is the reason why we suggest people to not be afraid, come through the process of pre-approval with us, and we'll walk you through why it's a good thing.
Yeah, and I think, if I'm not mistaken, like Credit Karma and all these, they generally are looking at it through the lens of a credit card, and the risk factors for a credit card and a mortgage are very, very different. And so really, don't listen to your family, friends, or the internet about what you think your score needs to be or what it is. We're going to pull the one that's going to be used for qualifying for this. And to Matt's point, I mean, my goodness, so many people think, oh, I've got bad credit, and maybe they had a couple lates on their credit card 4 years ago. And so that model is coming a little small, a little short. But in terms of the risk factor of buying a home that's secured and everything, it could be a lot higher. So definitely take the time to go through that process. And Matt, how much does it cost to get a pre-approval with TruLoan mortgage at least? Zero, right? No cost.
We do all our work up front. You know, sometimes we work with people for a year because sometimes it takes a year. Maybe their situation, maybe the housing market, maybe whatever the case may be. Maybe they just don't find the right house. But we work with people for a very long time before we finally, before we finally charge anything. You only pay for us at the closing and it's just a sliver of the closing costs. And it's one of the things that we do, by the way, is make sure that you know all the closing costs up front. And that's our job to estimate that transaction from the beginning. So a lot of times, a lot of people are reaching out to us and that, let's say that we're working with somebody over long term like that, a year. They're reaching out to us multiple times over the course of that year. We're talking about budgeting and adjusting our plan, but no, you don't pay us a thing up front. We wouldn't take $1 up front.
Brenda, Sarah's got the last question I see here, and that is just about can I get a gift for my down payment from a friend or a family member? So can you address that, please?
So the answer to that is no and yes. You cannot get a gift from a friend or a random stranger. You can get a gift from your employer. You can get a gift from a family member, but there are pretty specific rules about the relationship you have with somebody who can give you a gift. But you can.
But you can get a gift.
Yeah.
And when you get a gift,
it can be all of your down payment. It can be for every amount. If you have to bring $4,327 to the closing table, you can get a gift for all of that.
And if I'm not mistaken, most first-time home buyers, I'll ask the whole panel, many first-time home buyers, I should say, end up getting some closing costs paid by the seller, but that's a negotiated aspect. And depending on the house and the market, you may or may not receive, but that helps ease the burden of getting into the house. Nick, that's something you negotiate for your clients all the time, right?
Yeah, of course. But of course, that's something that, again, in this market, right, is becoming
Depends on the
common. Yeah, because if you got to think about it from the seller's perspective as well. But it is something that is very commonly asked for and can be negotiated. So yeah, there are different ways to definitely get those costs and different ways, or costs down, I should say. And that's all in the part of the reason why you have a team that's experienced in that.
Thank you so much, Nick. Hey everyone, I just want to thank you. It looks like we've answered the questions that have come in so far, but we're here to continue to answer your questions on a one-on-one basis. I know that we've answered a lot of questions people have asked that are kind of general, that kind of apply to everybody. But your situation is your own and it's unique to you. And that's what our one-on-one consultations are about. Not only for Nick, from helping you find exactly the right neighborhood and the right home for you, but also from our side to help you with that pre-approval. So I do want to remind you, you're going to get an email from us. And we want you to go in and select a date and time that works for you. It's free. And once you get pre-approved, you'll get that gift card to Legion Brewing. Go have fun. We'll join you next time there. And then whenever you do close, you get a $500 closing cost credit from us toward the appraisal, as long as you get on the schedule. Do that by the end of this week. And then Nick's team is offering a $500 realtor credit from their commission back towards your closing costs, as long as you consummate a transaction this year, and the minimum price of $175,000. So I just want to thank everybody for taking your evening and your precious time with us this evening. We appreciate each and every one of you, and we look forward to meeting you and helping you through your home buying journey. And if you're not ready for that home buying journey now, please pass along our information to your friends, your family members, your neighbors. We want to work with you and or your loved ones and friends and family on their home buying journey. So thank you very much, and look out for that email. And we'll also have a survey, so please remember to fill that out. We take your feedback very seriously to make each of these events better than the last one. Thank you so much.
Thank you.
Thank you, guys.
You guys.